Hi, it's Melody with Realty Executives Main Street, and today I want to take a couple of minutes to explain the difference between three important financial terms that you will often hear when you are buying a house. And the way I remember it, with my teaching background, is C, D, E. Okay, so let's start with C. C is the closing costs. These are fees that you pay when you close on your house. These fees go for different companies processing your forms. It also goes to an attorney to look over to make sure all the paperwork is correct. And a lot of times, if you are a buyer, you can get the seller to pay your closing costs, and that can be negotiated through your realtor. D stands for down payment. Okay, so let's say you find the house of your dreams and you want to, you put an offer on it, it's accepted, life is good. Then you meet with your financial institution and you say, okay, I want to put down 20%. That means whatever the total cost of the home is, you have 20% of that amount and you want to pay it toward the mortgage. Now that's a good thing, because then that means usually your loan will not have to be as much as it would be if you didn't have a down payment. And I'm just using 20% as an example. It's good to have, but sometimes you have to put down a little less, and that's okay too. So C is closing cost, D for down payment. And then we have E. E is probably the most confusing one, as it stands for earnest money. And basically this is, well, if you're from the South, a lot of times they'll say, oh, your word is good enough. I don't need any documentation. Your word and handshake is good enough. Well, a lot of times it is good enough, but a lot of times it isn't. And so you got to think of a good faith estimate or earnest money like it is your commitment that you are really serious about buying this house. So let's go say that I find 3 houses that I'm very interested in. Before I put up an offer, I want to decide how much money that I can put toward that house to show the sellers that I'm really interested, so that they don't sell it to someone else until I can get all of my ducks in a row. So let's say I chose to put down $1,000 in earnest money. This shows the seller that I'm committed, that I want to work with them, that I really want the house. The more earnest money that I can put down, the better, because at closing time, that earnest money will just be subtracted from the total amount of the house. Now, the negative part is you actually have to have that money. So it either has to be in a checking account or a savings account, because you will actually have to give that earnest money to the real estate agent or financial institution, whoever you're dealing with, and that will not be coming back to you. So I hope this clears up some of the C, D's, and E's: closing cost, down payment, and earnest money. As always, if you have any questions, feel free to let me know. I would love for you to subscribe to my channel or follow me on any of the social media outlets. It's # Melody Wagstaff Realtors. That's 1 G, 2 F's, and I would love for you to follow me and make any comments or suggestions that you have. Hope to see you soon.